Under the spotlight, we're trading below that key 7 rand to the dollar level at this point in time. It seems that many market participants expect a rate cut, bringing rates to 5.5%. What are the markets telling us today?
Good afternoon, Eleni. That's it. It's a big day for us, right? It's the last MPC of the year. And yeah, we've got to wait till 3 o'clock to pretty much give us an idea of where we're going to end this year on interest rate levels and what is going to be looking forward into 2011. At the moment, markets still pretty much expecting a cut. We're still favouring a sort of a 60-40 chance of a cut for this meeting. And a little bit has changed since the last communication from the Reserve Bank. But yeah, I still think markets favouring that at the moment.
Well, I mean, taking a look at that retail sales number out yesterday, showing growth of 6.1% in September and really beating analyst expectations. Most were hoping for around 4.7% growth from 4.6% the previous month. What is your view on that? Do you think it might affect or perhaps impact the decision today?
I don't think it'll change any minds with regards to the outcome today. Certainly it's an encouraging number and the economy needs to see those retail sales picking up. It's good from a manufacturing point of view as well. But the real hard issues that they're going to be looking at is growth and employment, as well as the obvious one, which is the mandate of inflation targeting. But since that mandate has broadened, I think the real deal is employment right now, and globally employment is low, and locally we've got a rising population and we've got high unemployment. So I'm certain that they'll take that into consideration this afternoon.
Some are arguing that even if we don't see a rate cut today, we might see another 50 to 100 basis points cut perhaps into 2011. What is your view on this?
Yeah, I mean, that's very possible. The MPC is always, prudent, and they may just well be conservative and say they want to see some more data. It is expected that the CPI inflation will tick up over the next couple of prints as a result of base effects. So they may well just want to see that. Also with the rand a little bit weaker off its stronger levels, sitting around the 7 rand sort of psychological level, they may want to just, have a look and digest some more data going forward. At the moment, though, I would think, sooner rather than later would be the call. If you want to stimulate and get things going, it's probably, in line with what the rest of the sort of world has been doing. In general, it's probably a good idea sooner rather than later, I would say.
What kind of impact is this going to have on the bond markets in today's session? Just taking a look at a lot of the flows that have been flowing into the country, more money coming through into the bond market as opposed to the equity market. And some are arguing that if we see a significant drop in interest rates, that perhaps is going to deter some investors to look for higher yield.
Yeah, I would still think, relatively we are still quite high, sitting around this sort of 6% odd, 7% on the bond market, compared to, the American yields, which are around the 1.5% for a similar period. We still are high. So, a 50 basis point cut could actually encourage the holding of bonds, and especially if there's any indication that, there's scope for further cuts down the line. So, at the moment, it's a difficult one to answer. Certainly from a currency point of view, a cut, initially could be seen, slightly rand negative, as you say, changing the attractiveness of the yields. But longer term, if it's a stimulatory step, it's ultimately positive.
Okay, James, well, what kind of moves could we see on the local currency today? I mean, given the fact that we have basically priced in an interest rate cut, do you think that we could see a little bit of weakness today?
If there isn't a cut, you probably will. You can expect some rand weakness, you would assume. And if there is a cut, yeah, I think it'll correct a little bit higher, perhaps around to this, 7, 10-ish level, you would think. We have seen quite a fair amount of exporter activity up at this 7 rand level, suggesting that, people have been holding on to their dollars, waiting for some weakness in the currency, and the 7 rand level seems to be attractive. So I think, it certainly will form a level of resistance just above 7, you would think.
Just looking at the inflationary environment, we're sitting at 3.2%. Some are also arguing that we could see inflation dropping to below 3%. Do you think that could be a significant threat to the South African economy?
It would be, as we move closer to the lower range, sitting at, as you say, around 3.2. Anything below 3, we're going to start worrying, about growth. And growth, as the finance minister has said, it really needs to pick up to create the employment required to, in this country to reduce the unemployment levels. If we slip below 3%, it's going to be a big concern. So I seriously believe, it is going to be on their minds. And it's one of the most important things to look at is what is the Reserve Bank's inflation forecast? Has it changed? So that's something we'll be looking at closely this afternoon.
James, tell us a little bit about the trade ahead of the MPC rate decision. I mean, also when you look at what's happening with Ireland saying that it will work with the EU and the IMF, so a lot more optimism today. You've also seen Korea hiking rates this week and also saying that it's going to reintroduce tax on foreign bond buying, of course, again, to try and push away some of those investors. So a lot of external factors that could be affecting sentiment into South Africa. Do you think most investors will be focusing on those factors as opposed to the MPC decision?
Well, I think if anything, internationally, the investors are holding off as well, looking at the Ireland situation and waiting to see the outcome of that. It's a positive step, but until, risk appetite isn't going to increase until we see some sort of outcome with Ireland. But generally, the markets have responded positively to that. As far as, local investors are concerned, the big deal is the MPC still. But, obviously, we look at Europe. The finance minister yesterday mentioned that, he is concerned about the situation in Europe. So at the moment, it's seen as Rand positive, those developments in Ireland.